Good afternoon, everyone. This is Duran over at Alpha 7 Trading Academy. I just wanted to go over briefly Fibonacci extensions, how to use them, how to put them on. A lot of people have an idea of how to use it, but one of the biggest questions that a lot of people have, and it's very popular, is how do I know if I'm putting the Fibonacci extensions at the right points for low and high? So what you have to do is make sure it's a significant low or a significant high that you're matching it with. So as you can see, that low of the day where I'm going to start putting the Fibonacci extensions, you're going to see exactly why I picked that low, which is because that is the low right before it reverses and begins to go higher. So now I'm going to pick extensions, Fibonacci extensions, and what we're going to do is we're going to take that significant low to the significant high. Okay, but then that's not it. Then what we have to do is we also have to do it on the other way, from the high to the low. That way you get the extension from above and also the extension from below. Okay, but most of the time what's really important is the extension on where it's making its current high, or where it's made its current high. So let's begin. Now we're going to take from the low, this significant low, to the high, and then we're going to take the high to the low, and we're going to move it a little bit to the side so that way we could see the numbers. Okay, you want to make sure you see both of the numbers, so we're going to put that perfect. Alright, now these are the Fibonacci extensions. You have them below, you have them on top. Even if you change the time frames, they'll still work out. They'll lock in, but usually you really only want to be using Fibonacci extensions on the 15-minute or higher. Most of the time you really want to only be doing it on the hourly or higher in order to make sure that the numbers are good numbers and they hold strong resistance and support numbers. Okay, so as you can see, they still lock in even if I switch to the different time frames. However, we would want a different significant high and low on the other wider time frames because we have more data to sift through. Okay, so let's just keep this for the hour. Now, you can see that we have some support and resistance right above us, right below us, even above the high of the day, or 52-week high, whatever it may be. The next thing I want to do is I want to go over another program. It's web-based, and it's called TradingView. And TradingView is a great platform. It's good to use, especially if you don't have a platform or you have a platform, whatever it may be. So it's called TradingView. You can look at the URL and pick it up there, and we'll look at RHT as well. Now, you can move it up and down by the cursor, move it left to right, truncate it, or expand it. You can move the chart any which way you'd like. Okay, it's a very comfortable platform, very easy to use. Now, on the left of this, we're going to see the Fibonacci retracement. Okay, we're going to choose the Fibonacci retracement and do the same thing. Significant low to the high. And then again, high. I forgot you have to click again. Okay. Okay, from the high to low. Move it a little to the left, but the same price. Try to get it exact as much as possible. Okay. And as you can see here, we have the same extensions. They're much easier to use, a lot clearer, and it's good because you can also save your charts and you don't have to worry about clearing it up or anything of that nature. So I suggest you guys try it out, and I hope I brought some sort of lesson into the Fibonacci's on how to find the low and a high in order to be confident that it's going to work. Also, we go over this deeply in our Level 3 and Level 4 education, also Futures and Forex course. So there's TradingView again. I hope you guys enjoyed it, and I hope you also learned something. And if you have any comments or any questions, just shoot me a comment wherever you saw this video, and I'll be sure to reply back to you. Have a good day, guys.